Stock Split 101, Understanding Rigetti's Potential Move. Imagine this, a company's stock price skyrockets, driven by excitement over futuristic technology that could reshape the world. Investors are pouring in, and suddenly, whispers of a stock split start making the rounds. That's where Rigetti Computing, RGTI, stands today. With quantum computing capturing imaginations globally, is this high-flying tech firm on the verge of a stock split? And what does it all mean for investors eyeing the next big thing? But here's where things get tricky. Stock splits aren't just about numbers. They can signal deeper shifts within a company or its market strategy. So let's unpack what's really going on with Rigetti and why everyone's talking about whether they'll pull the trigger. First, let's clarify what stock splits actually are and why they matter. A stock split happens when a company decides to divide its existing shares into multiple new ones. For instance, if you own 10 shares priced at $75 each, after a 3-for-1 stock split, you'd have 30 shares valued at $25 apiece. Your total investment remains unchanged. It's simply redistributed across more shares. This process doesn't alter the company's overall value, but makes individual shares cheaper and potentially more accessible to smaller investors. On the flip side, there's something called a reverse stock split. Instead of increasing the number of shares, a reverse split reduces them while raising the price per share. Why would anyone do that? Often, companies use reverse splits to avoid being delisted from major exchanges like the NYSE or NASDAQ, which require stocks to maintain a minimum trading price of $1 per share. If a company finds itself teetering on the edge of non-compliance, a reverse split might be their lifeline. Now, back to Rigetti. As a pioneer in quantum computing, this company is building machines capable of solving problems far beyond the reach of traditional computers. Quantum systems rely on qubits instead of standard bits, enabling faster and more efficient calculations. Think about simulating chemical reactions, tackling climate change, or revolutionizing artificial intelligence. All areas where quantum computing holds immense promise. In July, Rigetti hit a significant milestone. Their 36-qubit system achieved a remarkable reduction in error rates, marking one of the best performances ever recorded for their technology. The company is now aiming even higher, working on a 100-qubit system that promises even greater computational power. More qubits mean more capabilities, fueling further interest in Rigetti's potential. However, Rigetti's journey hasn't been without turbulence. Late last year, the stock dipped below $1, sparking concerns about possible delisting. Shareholders approved a reverse stock split plan in 2024 as a precautionary measure. But then the tide turned dramatically. Investor enthusiasm propelled the stock up an astonishing 1,370% over the past year, pushing Rigetti's market cap to $4.7 billion. Suddenly, fears of a reverse split vanished. So, should we expect a regular stock split instead? After such a meteoric rise, it's tempting to think so. But consider this. Rigetti's current share price hovers around $15, not exactly out of reach for most retail investors. Plus, according to MarketWatch, the majority of Rigetti's shares are already publicly traded on the NASDAQ, suggesting minimal liquidity issues. In other words, the typical motivations for a stock split don't seem pressing right now. Moreover, given Rigetti's compliance with NASDAQ regulations, there's little urgency for a reverse split either. Sure, quantum computing companies are still navigating uncharted waters, striving to refine their technologies and bring practical applications to market. But for now, Rigetti's financial performance remains modest. It generated only $1.5 million in revenue during Q1 of this year. While this might raise eyebrows among skeptics, the sector's long-term prospects continue to captivate investors. That said, market dynamics can shift unexpectedly. What if investor sentiment wanes or broader economic conditions worsen? Could a sudden sell-off push Rigetti's stock below $1 again? It's unlikely, given the buzz surrounding quantum computing and Rigetti's ongoing advancements. Still, it's worth pondering whether external pressures could force the company's hand down the line. So, Will Rigetti execute a stock split anytime soon? Based on current circumstances, it seems unnecessary. But here's the part most people miss. Stock splits aren't purely technical maneuvers. They're also psychological plays. Companies sometimes use them to signal confidence or attract attention. Could Rigetti surprise us with a bold move? Or will they stay cautious amid uncertain times? What do you think? Do stock splits truly impact a company's trajectory, or are they just smoke and mirrors? Drop your thoughts in the comments below. Who knows, maybe you'll spark a lively debate.